And you have another dog? You have like a bulldog or something?
We've got a bulldog, yeah. Yeah. So
How old's that
it's not a great idea, but it's an idea.
I gotta tell you, when you go from 2 to 3, it's definitely a bit of a step up because when you're walking them, it's no longer like man-on-man defense,
Yeah. It's just like kids. Once you're outnumbered, you're in trouble. So
yeah, it's a little bit. But I
off.
mean, I'm the psychopath who has 3 in New York, so
a lot of tangling, I would imagine.
There's a lot of tangling. Especially also it's like tricky when they're mismatched in size. Like you'll be able to walk your 2 calves on, with one hand, but I mean it's hard to mix like a calf and a bulldog, Or do you have Frenchies?
No, we've got an English bulldog.
Yeah, so when you have like big size differences, it's hard to like, put those 2 in one hand,
That is true.
But, if I ever win the lottery or actually size up one of my 5-baggers to a point that it changes my life, you'll be able to tell because I'll have like 8 dogs then. So
you'll become a dog person, a crazy dog.
I'll become like the crazy dog person with like 8 dogs. So that'll be my sign that I won the lottery. So I'm never going to talk you out of a 3rd dog.
Yeah. Well, let's see if we can make some trades. We got Nike left, and that's kind of the end of our year. So
I think that's it. I think we're done with retail earnings season just in time to get ready for like pre-announcements on companies.
Right. The post New Year's kind of, this is our sales update.
Oh, you got one more. We'll be the last reporter of the year will be Carnival Cruise Lines. Because they're on like a really weird year. I'm looking to see when they reported last year. They're reporting 12/20. So when's that? That's like the end of this week. Friday.
That's Friday. Who the hell reports on Friday?
Friday before Christmas. Carnival.
That alone suggests just a certain amount of low expectations.
What's that?
That alone makes me think they're going to miss.
Nah. The cruises are on fire. It's fire.
God, and they just never stop either. They just wait. People just love freaking cruises.
Well, yeah, they had a bit of a near-death experience a couple of years ago. I don't know if you remember that,
but they didn't die from that. Like demand just came right back to where it was. I was looking at them when they were poisoning people to death. Remember, like the outbreaks of God knows what.
Oh, they still have. I mean, they've had some, not like to death, but there's definitely been some norovirus this year. But like the people who love cruises just don't care.
No. They look pretty unappealing to me. I gotta admit.
Yeah, me too. Except for like those little, like the smaller luxury ships, that might not be terrible.
Yeah, like so many things in life. If you're willing to pay up,
yes, if you're willing to pay like $4,000 a day, it's probably going to be okay. But yeah, like the Four Seasons one looks okay. But yeah, it's amazing. The balance sheet, impairment will be, probably reversed eventually on those. The biggest post-pandemic comeback for sure.
Yeah, just crazily.
Yeah, so is Nike tomorrow?
Nike's Thursday.
Thursday? Oh God. They're really leaving it to the last minute too.
Yeah, they don't have any good things to say. It's going to be
There's a few other things this week, aren't there? I feel like CarMax is this week. Maybe Micron is this week. There's a few weird stragglers here and there.
Imagine being short CarMax the last little bit.
Just because it's volatile on earnings.
Yeah, CarMax and Carvana, the two things that you have to take your risks if you're going to be involved in those.
Yeah, CarMax especially. I mean Carvana, because there's like so much short interest. Yeah, Micron's Wednesday night and CarMax is Thursday morning. It's like, Yeah, the endless earnings season continues.
We should have Baker
Micron's
look
usually pretty
at.
volatile too.
No,
Should have Baker
Winnebago's
look
on
at
fire.
Carvana.
What's that?
We should have Kevin Baker look at Carvana from a technical standpoint, just because anything that's up 400% in a year, that's not a penny stock with a $52 billion market cap. It's kind of
Yeah, the
interesting.
market cap on that is my real real's up almost 400% this year. It's a mere 350, but it started
What
from
is?
pretty small.
Well, I think we're gonna get ready to start here. Are you guys ready? The core team. We may be
Sure.
smaller. We may be a smaller team with fewer members right now this morning.
Small
The
but
others,
mighty.
others couldn't get up early on a Monday. Well, let's begin. So I'm David Maris. This is Wall Street Beats. Berna Barshay, Jeff Macke, and we're going to talk retail. I suppose. I think that's what we're going to do. Berna, why don't you kick it off? Tell us what do you have for us today? What are we looking forward to this week? What should we take profits in? What are you doing?
Sure. Well, I haven't been on since a couple of the companies that I've been talking about reported, and both Lululemon and Petco had big moves on earnings up. Although the play probably would have been to fade those earnings because the big move, because now they're starting to give back the move that they had on earnings. But it was interesting that both of them moved so much. I was thinking a lot about it, and I've saw it in some of the other retail names that were, are down a lot off their highs, and where expectations were pretty muted, and people know that comps aren't great, and if they eke out even like 0.5% positive, that's good news. Um, both of them reported quarters that to me looked a lot like the quarters that preceded in Q2.
Right.
Yet, both of them moved huge on earnings. And,
Just took out people to the woodshed. Lulu didn't seem that great to me at all.
no, it's like you
Yeah.
got a negative comp in North America again. I mean, China decelerated, but was still, north of 20% growth, which was not a surprise to me. That was the reason I was recommending the stock in the first place, saying that at around 300, you had it in the valuation that North America was going to be challenged for a few reasons, and market maturity, growing competition, being two of the primary ones among them, those reasons. Not that there was anything broken about the company, just law of large numbers, kind of. But down at 300, it looked kind of appealing, and they reported a quarter that looked a lot like the second quarter, and I would say the same thing about Petco, although the comp inflected slightly positive there. But nothing, I think it was like 1.5, like nothing to write home about. Both of them went ripping. And to me, it was like a classic. This is the same situation you described last quarter, but now we're going to look at the glass as half full instead of half empty. And, that's a reasonable pivot for people to make, but it just surprising to see 20% moves out of the stock on sort of a change of sentiment. Now, some people might say that there's, short covering. I don't know that there was that much short interest in Lulu to explain it. I think that, people are feeling on the margin. And Jeff, you called this early, like when we were talking in early November about Christmas, you're like, Christmas is going to be fine. And you know what? Christmas is going to be fine. And people are sort of, they've gone half empty to half full on the consumer too. There's, kind of optimism over the new administration and the doji and all that stuff. And, I don't know if any of that's going to come to pass. There's certainly headwinds coming from the new administration. I'm very concerned about tariffs, and it's something that I, go through on every single company I look at as a risk factor. But, there was just a sentiment shift. It was a classic sentiment shift that people are looking at these stocks that haven't done well this year, that are in consumer, but have some kind of enduring franchise, and coming for the left behinds. So, it's interesting because I've been picking through the left behinds all year, and to see this inflection when nothing's really changed is a bit of a surprise, but I'll take it.
Well,
in
we've
terms
seen great moves in a lot of the super left behinds, right? I mean, you mentioned Petco. That was really just kind of getting the old Yeller treatment as far as investors are concerned. We had a nice move from Chewy, Real, Rent the Runway, Stitch Fix. I mean, it's a lot of these companies that people just assume were really, really dead have seen bottoms, and then you kind of go up a tier, and you get to Lulu, which isn't dead, just kind of they're moribund. They are where they are. But that stock has been in a range for the last 3-4 years based on the idea that growth would eventually slow. It did. Here we are. North America is negative and China's great. And, maybe we'll grow stores in Europe. Nothing spectacular there, but we're kind of just the story's played out. It's athleisure's not going away entirely, and that was good enough for a 25% rip in the stock. Do you buy it?
Yeah. And as far as what I'm doing,
that's my question. That's my question, Berna and Jeff. So you're looking at Lulu up 27% in a month, and
I would not chase it. No.
Yeah, but so if you owned it, would you sell some? Do you trade around these things, or do you just kind of say, well, you know what, it's a little expensive now, it's not outrageous? What are you doing, right now, or how would you think about it?
Well, I mean, on some of these, it just sort of depends on the situation. Like something like Lulu seems like where nothing's really changed and it's at a higher, valuation. It's not a cheap stock. It was a cheap for itself kind of stock. That seems like a profit taking opportunity. And the fact that it's trading down off of that initial spike makes me think that people are taking profits. I mean, I didn't sell any Petco into this because I'm playing a long game there where, I was buying a low single digit stock on the bet that it wouldn't go bankrupt. And like when I buy, it's a small position, and small risky position. So sized, 1-2% because it's risky. But I sit and let those hold. I mean, sometimes I'll take my money off the table, like I talked about with Real when I got my first double on it. Or maybe I did it at a triple, but I took all my original capital out of it, but I'm letting that ride. So it sort of depends on whether or not you were playing, a bounce versus playing, a real turnaround on something that's distressed. So the last trade that I made on Friday, I bought Abercrombie, which is kind of the opposite of this. Everyone's known that class has been not half full, but like overflowing all year. But it sold off a lot. I forgot what it got to. It sold off a lot
it got to the 130s. It was
it got to it got to sub 140, which is where I was looking for it. I guess it had gotten to over 190. Hasn't missed or anything. And so, that was one that I completely missed on the way up. And, maybe I was grounded in the 5 fake failed turnarounds that I had seen attempted since 2008 when, they hit their prior peak. So I just didn't see it coming. But then, I did that big report at the mall on Black Friday, and I am haunted by the fact that when I did the report last year, I talked about Deckers as, the clear winner of the mall. Didn't buy it because I thought it was expensive, and it doubled in the last year without me. So this year I declared Abercrombie my winner of the mall based on the fact that Abercrombie is still doing great and that Hollister is much, much, much improved. And you saw that in them lowering the depth of their promotions this Black Friday versus last Black Friday and having them on par with what they were doing at Abercrombie.
And instead posting of 20% comps at Hollister.
Yeah,
I mean,
like
Abercrombie's been trading like crap all year long, and this done nothing wrong.
The stocks didn't do great. I mean, I don't know if it's profit take. I can't imagine that they're not going to make their quarter. And I was just looking at their numbers for next year, and they're like very muted. People are looking for mid-single digit growth, and I just think that is eminently doable. Just based on Abercrombie holding strong and Hollister continuing to improve. And
so you own some Abercrombie now.
So
Jeff,
it's a new position.
I own Abercrombie and have owned it for ages. Berna just got long. I was kind of got a little wussed out a little bit. I should have bought more on the dip, but where you stand, it's kind of a function of where you sit. And if as a new position, what a great entry point this is. It's not trading off the comps because they're clearly not going to comp 20% in a row. But then again, Abercrombie itself, the flagship nameplate brand for them, is still growing double digits, and they're executing. It's not an expensive stock. They're not earning it in some unusual way. It's not some one-time hot product. It's just that they're finally executing this plan, and so they have kind of the barbell ends of the socioeconomic kind of, the structure there in terms of who their customer base is, and it's really hard to hit to both those sides, but they're doing it, and they're doing it in a way that looks sustainable. The multiples aren't high, and the company is actually growing. They're doing terrific things, but as Berna said, and as I've been saying, that's a stock that people take one look at the chart and they say, this looks like bullshit. It's up from $17 to $165 in the last 5 years. That's crazy. It's unsustainable. And it's like, they're just a better company.
Yeah,
now.
but I looked at it, and the valuation is unlike Decker's last year when I couldn't bring myself to buy it because it was like, I don't know, 35 PE. Then they double earnings, and it's still 35 PE. This one's like 7 times EBITDA. It's like maybe 13, 14 times, on PE. It's not an expensive stock. So I'm trying to not make the same mistake I made last year and do all my work at the mall and then not participate in what is literally right in front of my face. So I was waiting for my entry point, and I got it last week. So that's a little bit of the opposite of this, like, glass half full thing. I've already been sitting in these glass half full stocks as a contrarian. But you talk about selling, my discipline, I'm not buying Abercrombie to wait for a double and hold it forever. This is a different kind of thing. It's gone from 190 to, 140 for no reason. And I think that, they're not going to miss earnings, and they're going to they could give guidance for next year that is, quite a bit above where the street is right now, or, well, they'll probably sandbag it, but maybe modestly above where the street is next year. And maybe there's a path back to those highs. And, I would probably sell if it went back to the highs, because I'm not super deep on a giant thesis on Abercrombie. I think it's gone too far, too fast. Whereas something like Petco, I've done crazy amounts of primary research, and, I'm in there for a long-term turnaround, and I'm not trading around that.
So I want to do something interesting here, or at least I think it's interesting. Maybe it's not, but for someone who's not a retail investor, this is the end of December is a time that college kids and school kids kind of dread, at least if you were a student like I was, because this is final exam week or so. And so if you were going to give a grade, we talked about Lulu, Petco, Abercrombie. First grade is on how the business is doing. The second grade on the valuation. I want to hear Berna first, then Jeff. What would you give each one of them? Business, how it's running, like what's the robustness of the business and how the management is, all overall grade of that, and then valuation second. We'll go one. Actually, we'll do Berna and Jeff at the same time. Lululemon.
Lulu, I think I would give them probably a B- right now for how they're executing relative to where they were. They're kind of a former straight A++ type of student who, they spent 4 or 5 years winning Christmas. Berna and I both, it's once you're going to the mall this time of year, you need to find things to do to take your mind off the fact that it took you an hour and a half to park. One of which is, let's rank the retailers. And so I rank them every year. Berna ranks them every year. Lulu won 4 or 5 years in a row. I mean, they used to be so unbelievable that standard is set really high for them. And right now, you're negative comping in North America. It's kind of a gentleman's B-. But if you're just going to give them a straight up, how'd you execute this year? I think even the company themselves would give themselves a C. They openly missed fashion cycles. They openly didn't execute. That doesn't make them terrible. And, a C for them would be an A++ for a company like American Eagle. But when you're Lululemon and you're as good as that company is and as exceptional as they can be when they're hitting on all cylinders, it's a drop off in performance. They'd be the first to tell you. Calvin McDonald is the first guy to tell you. And, I kind of, that company the stock is back to where I sold it the first time. And so okay, I would rather see it improve.
So what grade would you give them on valuation then?
On valuation, I think they're probably still a C. I mean, it's really hard, David, for me to give them that much credit on China in a world where, Starbucks is trying to sell China. I'm not sure what goes on in China. I kind of give a vague but very, very harsh discount on China growth. And I want to see North America turn. I want to see them get their act together back and get those stores growing again. And that's going to be what the next level is for them. And you want to buy that about 3 weeks before they announce that it happens, because once it does, it's going to pop again. But that's fine. We'll let them
Berna,
wait.
what do you give Lululemon?
I'm going to give them a B as opposed to a B minus. I mean, they've obviously had troubles in North America this year. But I'm going to give them a little bit more credit for China, because you see all these very fine brands that have been there longer and are more established, like Louis Vuitton going negative in China. So pulling out that, 20% plus China growth when Louis Vuitton's negative.
I have no problem. Look, B minus is really the same grade, and I would take that as a win if I were there. What about valuation? Because I see the valuation. I think it's that has to be like an F valuation. That's really high valuation.
I mean, you have to remember, this is a company that traded 35 PE plus for the longest time. I don't think this company will ever get below 20 PE unless they really, really start falling apart in North America, which I don't think a -1 comp is. So, I'd give it like a C. It's not compelling here, but it's not egregious. Not in a world where, Kava is at 100 PE or something for mediocre Middle Eastern.
I'm good with it. I just want to know. I don't want to debate it. Okay, so now go to Petco. What do you think, Berna?
Petco, I would say is like solidly B minus, in terms of operations. It's going in the right direction, which is what you need. I mean, they did a lot of self-inflicted damage under the last CEO. They fired a lot of customers by getting rid of their more moderately priced selection. They, in good, better, best kind of terminology around retail, they decided to be at the high end of better and best. They talked about wanting to be the Whole Foods of pet stores. And you know what? Whole Foods is a niche business. They have too many stores to be a niche business like that.
So you're giving them a B on that.
B minus. It's going in the right direction.
And what? Okay, Jeff, Petco, just
but valuation. Grade. You want
I'd give it a C just because I don't own them. So it's you're more inclined to give your kids a little better grade. So I miss them. I've been long Chewy, but they're kind of in the same situation. You can point to these stocks. They both bottomed when Chewy said on their conference call, the industry is stabilized, because we had that huge backlash. We had the big COVID pull forward, and that industry stabilizing, David, that introduces the possibility that they can actually make money again. Both these companies spent 2 years playing rear guard. We need to protect share. We need to kind of, we're not sure what this industry is doing, but it seems to be going downhill. Once that stabilized, those stocks were off to the races. And so now you have a situation where the stocks are much, much higher than they were. They've got to kind of catch up a little bit. They haven't really expanded their earnings yet. They've just gotten to the point that they're sort of asymptoting on the happy side of zero when it comes to growth. And, it's that was good enough a year ago. I don't think that drives them to 2025. It's hard to make something your hottest pick when it's gone up as much as it has.
Okay, we know Abercrombie. Berna, you already gave it an A on attractiveness because you just bought some, but maybe execution not so great. But Jeff, where do you stand on it?
Oh, on Abercrombie, I think it's a terrific company. I'm long Abercrombie and would buy a dip, but I think that these things they have to digest. You just, once the stock has gone to 190 and pulled back a little bit, the jury's out, and it's going to trade the way Lulu did for a long time, which is just on the assumption they're going to miss someday. So the multiple, they turned in a quarter, David, that was honestly just gorgeous. If you want to see what a retailer that's crushing looks like, look at Abercrombie's last quarter. I mean, 21% comps at Hollister, 11% at Abercrombie. Like, that's just crazy. It was exceptional. So they're hitting on all cylinders, and then it's like, what are you going to do for me now type of question. That's really hard to answer.
It's an A plus, which is why people are scared of it. It's an A plus on execution. But the difference here is that it's like an A minus on valuation. I mean, it's not dirt cheap for a retailer, but it's still like, it's cheaper than a lot of retailers that are operating a lot less robustly than it is, so.
And what we've seen from the stocks is that the ones that are behaving the best are where expectations are kind of pretty low already. People are looking for the next act. How can they add some alpha to their portfolios? That's why I like companies like Gap. That's why I like companies that what you're also seeing, and another good tell for the industry, is the companies that do blow up and they turn in just hideous quarters. Foot Locker was hideous last quarter, just like they were the quarter before that. Macy's couldn't even come up with a number because they've got some guy freaking cooking the books in there for 3 years, and they had to state their numbers with the accounting fraud and then X the accounting fraud. That's usually a pretty bad sign. That stock didn't go any lower. It found a bottom pretty fast off a super uninspiring quarter. And so it's just kind of washed out. And that's where we are at this retail point. That's why we bring up Nike coming up this week. Can they pull sort of a Restoration Hardware, to name yet another company with sort of questionable fundamentals? But boy, what a great story. I mean, you listen to Gary Friedman, it sounds like, holy crap, that's amazing. And that stock's up 25% off numbers that they frankly took down and then sold it as a guide up. It was a very strange bit of alchemy, but
yeah. So I do want to talk about, Nike, because that's what you wanted to talk about today. So what are we looking at here? Kind of what's the setup, but also, where are they kind of on a grade wise? You're talking about a lot of retail things. And again, I'm pharma guy. I don't really, follow this stuff that closely. I'll trade in your names when you recommend them. And I never complain because I don't, if I lose any money, I don't have any reason to complain. Mostly I'm making money on the ones that you guys have been explaining. But like Petco, for example, I have zero brand. If there was a pet store next door that said it was called Animal Farm, I'd go buy a cat crate there. I'd buy cat food there. Like I have no brand loyalty to Petco. Lululemon, I do know that high quality, very expensive things. So there is some sort of brand there that I could say, well, at least you're paying for quality. That's fine. But I know that there are lots of things that have come in this last year or two that kind of compete with them. And Abercrombie, I don't have anyone that age, so I don't go to the mall and see what's kind of what's going on there. But I can kind of get the idea of, okay, it was hot for a long time. It had the retail cycle. It had the right. It had caught the zeitgeist of trends, and then it didn't. And then you kind of pick through and find your point where they come back, and it sounds like that's what they're doing. But Nike, I don't wholly get, because the swoosh does get me to buy things.
We're gonna pause for a second because I think we lost the broadcast. So I think we're restarting.
Yeah. So I asked